If you're looking to become a non-resident, this is what you need to know. First, if you own your own home, that's your main residence, you may want to sell it before you leave or transfer it to a trust or a family member or something, because you lose that exemption once you are a non-resident. This includes if you were an Australian resident for 20 years, lived in the same house, you then relocate to Singapore and then you sell it the day after you relocate, you get zero main residence exemption. Don't ask me why, but that's just what the government decided to do, even though the tax profession said, hey, that's really dumb. Number two, if you own a business, you may want to restructure it before you leave. Particularly if it's a small business, you can use something called the small business restructure rollover to move into a different structure. Family trusts in Australia, when you're a foreign tax resident, generally don't work very well, so we stay away from them. We prefer company structures. You can technically do this after you leave, but it's going to be a lot more problematic. And remember, if you have an Australian company and you don't reside in Australia, you need to appoint an Australian ordinarily resident director. And for your trust, make sure you have an Australian resident trustee. You may have to appoint a family member or a professional. But if you are the trustee from overseas, your trust has changed tax residency as well. And I'll tell you what, that's very bad. Number three, if you're going permanently, you may want to start transferring your wealth before you leave into an international structure. This may be a trust or a foundation somewhere in the world, and you may have to sell those assets across for market value to get them out. Remembering that if you're an Australian resident and you have a family trust and you sell it, make capital gain, you get a 50% discount. But those family trusts don't work right if you're a foreign resident beneficiary. So beyond just tax advice, you need to get a bit of financial advice if you're going for a significant period and moving your assets around. Because changing tax residency is a bigger life event as buying or selling a business, merging your business, getting divorced. It's just as big a trigger for all sorts of things that you probably wouldn't expect and they don't talk about down at the pub.